Good afternoon. Welcome to Asgard Real Estate Hub, where we liberate you on the information needed in real estate investments. I am Abdulgafar Assimi. Last week, we started discussion on the fundamentals in real estate investments. That is, what are those things you need to take into consideration while investing in real estate industry. We were able to identify some principles, and one of the principles is that identifying your niche, that is, what you are capable of doing, your weakness and your strengths. Also, the drivers you need to employ in carrying out these investments in order to be successful. Today, we take a look at a new dimension, and what we are looking at today is what we call the demographic. That is, are you taking into consideration the population growth of the area you want to invest your money in? That is the place highly populated? If it is highly populated, it therefore means that there's a market for your investments. People are looking for houses. People really need houses in that area. But if you are having a scant population, that is the place, there are lots of houses around, the houses around is much more than the total number of people available. Therefore, means that that place is not worth investing in for now. Now, another thing you need to consider is the migration of the people to this area. Are people moving in or people are relocating? How do you identify this? Go to the area, see whether there are basic amenities around. So if there are basic amenities, or like commercial centers, like good power supply, like good road network, people will be willing to relocate to this area. So if there is migration of people to this particular area, then there is market for your investment. Also consider the age in that area. What's the age range in that area? Do we have youths around there, or do you have aged people around here? If you are having youth around here, it means that you are having working classes in this area. Then your your pricing and the rental expectation will be what is already being put in place. So you consider this as a factor that will enhance your investments in a very short term if you are looking at a rental income. So if you consider the age, you will know that okay, you have highly people who are youth, then they are working class. Another thing you need to take into consideration is the race. What tribe are there in this area? Do you have Yorubas around? Do you have Igbos around? Do you have Hausas around? Because different tribes have different tastes. Different tribes have different tastes. What Yoruba people fashion in houses is quite different from what Igbo people will fashion in it. What Hausa people love to be in their houses is different from what Yoruba will love to be in their houses. Because considering these races, we give you a clue to the features you have to put in place while building your projects. Other thing is the average income. Consider this as well before you embark in any project. Look around. Are people, if you are building a higher value apartment, are people available to rent this? Is there a market for it? Or the people around are just low income earners, whereby they can only afford like 300 per annum, and you want to build an apartment of 700, 1 million, meaning that you just build your property and people will start to be giving you bad pricing. Another thing is the commercial status of the area. Consider it well, because any area that is highly commercialized, there's a market for real estate there. People will be coming in, and people will be coming in even outside the state or outside the country, who will be tripping into that area. This is often overlooked, and the demography of an area is often overlooked by most investors, but it is a significant factor that affects how real estate is being priced and that type of properties that people are demanding for. If you consider this, you will know that okay, the property I'm building in a particular location, yes, I already have, there's an existing market for it. This is a major factor. Another thing you need to you need to know that a major shift in the demographic of a particular nation will majorly have higher impact on real estate trend in that area for many years. Considering this, we let you narrow we let you narrow your cost, or we let you narrow the type and the location of properties you are considering or that you want to invest your money in. So if you have an existing market for the property. Maybe you just want to build or you just want to buy. You know that there's market for it, so it will be interesting to put money in this kind of market. It will be interesting to put money in this kind of property because there's an existing market for it. So you don't have problem in people renting it, neither do you have problem in people buying it. In fact, you even get a better value for it. You get a higher value for it, considering that I want to build an apartment, let's say for instance on the mainland, whereby I observe that the place is scanty, highly scanty. So why putting my money in there for now if I'm not looking at a long-term investment? Looking at a long-term investment means that, okay, let me just put my money there, then whereby I'm waiting for what? An increase in value. But if you are just looking for a turnover, it is highly advisable that you go to the place that is highly developed, that is, there is an existing market for it. So we put an end in this one today. By next week, meet us and we'll continue our discussion on the fundamentals in real estate investing. My name is Abdulgafar Asimi once again, and thanks for watching us.